y'all, Jordan Schlacey here, Junco Realty Group, and today's video is going to be how to calculate your monthly mortgage amount in Texas. And I also have included an accurate mortgage calculator here on the post. So here you can see we're on the Junco website. I published this post on November 13th, so I think that was that yesterday? Yes, so that was yesterday. I've uploaded a whole bunch of new posts since then, so if you're just going to the website, you'll need to scroll over a couple to find it, but you'll just click on how to calculate your monthly mortgage, or you'll click the link below. So let's go ahead and dive in. How to calculate your monthly mortgage amount, and this is for residents of Texas, and we also have that accurate calculator. So one of my most favorite things to do for my clients is to calculate the projected monthly mortgage. I've been doing this for years. I'm really confident with my knowledge around monthly budgets and home purchase prices. So most of my clients are moving here from out of state, and I've learned that there's a drastic difference between the way our property taxes work versus other states. And this just pretty much means our property taxes are a lot higher, but I also keep reminding my clients that we do not have state income tax. So as my dad says, 6 one way, half a dozen the other. So here's a mortgage breakdown. Now this is geared towards people that are first-time home buyers, so please do not think I'm talking down to you if you completely understand everything I'm explaining. I just love to provide knowledge and education to my clients, so that's what I'm doing. So in a monthly payment, you have principal, interest, taxes, insurance, sometimes PMI, which is private mortgage insurance, and I'm going to go over each one of those. If you are a visual learner, you can go ahead and pull up the blog post and follow along. So principal, this is the amount that is directly contributed to your loan balance each month. So say you take out a $280,000 loan, you know that you're not just paying back that $280,000, you're also paying back interest. So next is interest. The amount that is collected by the bank is technically like a fee. So in short, this is how the bank makes their money. And then taxes, each property is tax assessed by the county, and you will pay taxes to different entities of your community. Taxes differ by neighborhood, section, and sometimes even addresses within, and I'll go into greater detail on the taxes in just a moment. And then insurance. When you finance a home, the lender or bank will require you to carry and pay for homeowners insurance. Policies cover you and the lender just in case the home is destroyed. Flood insurance is a separate policy. If the home has never flooded, it's about $525, and it is advised that you carry this as well, but it's only required if you're in a floodplain. Even if you are a cash purchaser, it's still intelligent to carry insurance for those what-ifs. Next, we have private mortgage insurance. Now, this is something that you will have to purchase for your home if you own less than 20% of the home, and definitely will stay on there for the life of the loan if you're an FHA loan. Now, once you pay down 20% of the loan, you won't have to carry that PMI anymore. So this PMI, again, is private mortgage insurance, is a separate insurance policy the bank requires. It is the lender's protection in the instance that you default on your primary mortgage and the home goes into foreclosure. They would take your home, sell it, and then this insurance just covers them if they're not able to recover all of their losses. So passive profit. And I explained the PMI for FHA loans. Now, I do have homeowners insurance on here because when it comes to qualifying for a home, they are going to calculate the cost of, not homeowners insurance, homeowners association's fee. So this can be yearly, quarterly, or monthly, and it's paid directly to the homeowners association. It's not escrowed like the taxes and insurance. So the taxes and insurance are held in a bank account, and the bank pays those for you when the bills come out. So the taxes are paid in arrears and the insurance is paid up front, typically in 6-month increments. Now, if you are purchasing the home, then these are prepayments in your closing costs. Sometimes people think, oh, I'm going to put $10,000 down on my house, therefore I've saved up $10,000. Well, you're definitely going to need more than $10,000 in most instances, because you also have to prepay the homeowner's insurance, and the taxes. So let's dive in a little bit more on taxes. I'm going to take a moment here to dive in on the taxes, and here's a slideshow that I put together featuring 4 homes that are actually for sale in the area. The address and neighborhood aren't so important, but what I want you to reflect on is the tax rate and what makes up those numbers. So I'm going to click on this. You can see what the home was tax assessed at in 2019, so it was $217,000. Now they're going to do the little calculations, and they're going to call it a market value improved to $196. You can see how much each year they paid in taxes, so it's actually gone down for this home. So last year was $4,800. You can see the tax rate, and you can see the jurisdictions that collected those taxes in the corresponding amount. So this house happened to be in the Woodlands Township, so you can see the tax there. Conner ISD, Lone Star College, you kind of see all the different people that are collecting. So again, this is Conner ISD and the Woodlands. Now we're jumping over to Klein ISD. You can see that there are more jurisdictions collecting money. This home, I try to find homes that are around $400,000, even though they weren't all tax assessed at that amount, they were still selling for that amount. So you can see this one was a lot lower. This one's $364, so you can obviously see the difference. But see how these tax rates differ? You're at 2.86, and over here you're at 2.2. So a lot of the homes in the Woodlands, even though they are costing more money per square foot, you are paying typically less in tax rate. So here's another home in Montgomery County, but not in the Woodlands, and you're a little bit higher. So this is new construction at 2.9, and this is actually Foster's Ridge at 3.4. So you can see the different tax rates and how they break down and how they kind of contribute to a monthly payment. So I'm going to go ahead and read this. Above you can see that under the jurisdiction column which identifies for each tax rate. So it identifies for each tax rate belongs to. Okay, that totally doesn't make sense, but y'all get what I'm saying. So under the jurisdiction column, that corresponds with the tax rate, which therefore corresponds with the tax amount. So I kind of went through this already. I read through those on the left. So something else to note is that even though each home is for sale for $400,000, this typically has no bearing or relevance to the tax assessed value. A tax assessed value is different than a market value. The tax assessed value is determined by the county, and there are lots of opinions on this value. The market value is actually what a buyer is willing to pay for a particular home. So if you say, what's this home worth? It's what you're willing to pay for it. Now the asking price might be higher or lower than the assessed value, and the same goes for the actual market value. Now there's tax assessed appraisal value, which is done by a private appraisal by your lender to determine how much they value your home to be. This ends up being a very important number due to the fact that they won't lend you more money than the home is worth. When the issue arises of the home not being when the home isn't appraised for what you're purchasing for, so it's lower, there are a handful of options to come to a resolution, so don't fear if this is something that could happen. It's very important to fight your tax assessed value each year to prevent your property value from getting out of control. It's a very simple process. You typically can do it online, and most people just go through a couple steps and get a resolution. Others fight it in person and bring evidence with them to support the value they believe their home should be worth. It really is simpler than it sounds, and if you need any assistance, please reach out to me. Almost on a weekly basis, I'm preparing evidence for future and current clients. So you just do a little Google search, and I'm coming up for this, so it's super funny. So some key takeaways on taxes that I want to go over with y'all. I would like you to keep in mind that typically the newer the home, the newer the MUD district, causing the taxes to be higher. So the higher the taxes, the less home you qualify for. So in a neighborhood where the tax rate is 2.2, you might qualify for $300,000, but a neighborhood where a tax rate is 3.4, you might only qualify for $275,000. So please, when figuring out your home budget, know what your monthly budget is, not just your purchase price budget. Another thing to note is that your extra money is going towards taxes. in those newer homes instead of paying down your principal. So if you're thinking about saving money, you can still buy that lesser expensive home, but pay down your principal with that extra money by saving it, by not purchasing the higher tax rate home. So I think it's really important to know that what typically drives the tax rate to be higher is the mud. So again, there are very few new neighborhoods with low tax rates. So if you really like to save money, then it might be important for you to concentrate on older neighborhoods. So here's a mortgage calculator. Using this very accurate mortgage calculator, you can determine what your monthly mortgage amount will be. The average cost for homeowners insurance typically falls between 0.75% and 1%. Now, if you are kind of cheap, you can go down closer to 0.5%, and this is of the purchase price. So to do things quickly, if you're looking at a $300,000 house, you would just say, oh, 1% of that is $3,000. So that could be a number you use in the calculator. For PMI, you can put between $100 and $150 and depends on credit score and a lot of different factors. Now there's a link exactly right there to tell you what your PMI would be, and this is per month. For property tax, you can find it on the MLS. And keep in mind these numbers are without exemptions. And I included a link to learn about homestead exemption. And if you're trying to figure out what you qualify for, there's another link for that. So I'm going to show you that link real quick. I get nervous when I record, if you can't tell. Okay, so here's a home affordability calculator. So say your family makes $400,000 and you have $2,000 of reoccurring credit debt, and funds available for down payment will keep at $20,000. Say you have a really good credit and you think you're going to get 3.75, so you're going to have to up annual property taxes. So this is 2.4, insurance 0.75, and you calculate. So this will tell you monthly funds available. Let's say 40,000. So you could afford a $1.2 million house. So let's do something a little more conservative. Let's say you make $120,000. Let's keep your debt to $1,500. Let's say you have 20. We're going to keep the rest of the numbers the same. So $285,000 house. So this is a really cool calculator that we have a link to on the blog. So let's say you want to purchase, how much did that come out? $285,000. So 285, and you have that down payment of 20, interest rate 4. 4 is pretty common right now, so I would just keep it at 4. If you don't have really strong credit, maybe you would go up to 5. And then property taxes, $4,500. Homeowners insurance, let's say we're a little cheap. And then PMI 125. And so you hit the calculate button, and this would show you that your monthly payment is $1,890. So that's something you can compare to your current rent or your current mortgage to see if it's something that you can afford, or maybe you know exactly what you have left over every month. So super cool calculator. So if you need any assistance with any of this stuff, I kind of went over it fast. I get nervous when I turn the camera on, but I would love to answer those questions for you. I'm going to show you a couple more things. So here is the YouTube channel. You might be watching this on the website or the YouTube channel, but just know there is so much more content out there that I have created. Here is the landing page to the channel. You can see how I have it categorized. All of the most recent uploads fall under this uploads button, and you can see they go back over time. So 1 day ago, 6, 2 weeks, 2 weeks. I try to upload every single week. I've been doing this for a couple months now. I have lots of videos talking about moving to the Woodlands. I have model home tours for the area. I'm moving to Conroe, moving to Cypress, Spring, Klein, and then explore local. if you are relocating here and there's something you want to see that you do not see on my channel or on the internet, just shoot me a text and I will create a video for you within the next 2 days. I love touring homes, so if you are not here and you need someone to help you virtually tour homes, I do that too. So just keep that in mind. I'm going to come back over to the website. So when you come to the website, you're going to see this most recent post right here in the middle is pinned. So I'm featuring the specials that are happening right now. They're incentives at D.R. Horton. And then, again, I've featured some of the videos I've put together. This talks about this blog post right here is referencing what I believe to be the best home search website and app. So if you're looking for a home in the area, I would really recommend using this website. It's HAR.com. There are a couple different ways to link us together, so I really recommend looking at that. It's a really awesome communication tool. It is the most accurate and up-to-date website for looking at homes in Texas, so I would really recommend using it and not using any other website. You don't have to connect to me. You can use the website without connection, but there are some awesome benefits if you decide to connect to a realtor. So you can get history reports on the property. You can see sold prices for nearby properties. Now, Texas is a non-disclosure state, so you have to be connected to a realtor to get access to these, so that's really cool. So awesome premium content is available once you connect to the realtor. You can do this through the app or the website. My favorite tool is the app. I do love the app, but I understand some people like the platform of being on the computer better than the app. Excuse me. So another thing that you can find on the website are our most popular blog posts. And some of the blogs, I'm featuring them in the body, but you can also see them on the right. So if you're not sure where you want to live in the area, you can see best neighborhoods to live in, to let kids be kids, and the list kind of goes on. So if you're relocating, check out some of those blog posts. But I hope this video has been beneficial for y'all that are curious about how much you qualify, what your monthly payment would be. I really do love answering questions and helping you out. So if you have any questions at all, just send them my way. All of my contact information is below, and I hope y'all have a good day. Bye.